Welcome to our regular currency chat. Every day we'll go in depth on the forex markets with top analysts and traders. And our very own Trish Louis, of course. If you have any forex trading questions, get in touch. You can email me on the show at tradewithhaas@bloomberg.net or message the trade on the Bloomberg terminal. And of course, Trish is here. Trish, how are currencies going? Asian currencies doing so far with the dollar sell-off?
Well, we have. Well, with the dollar, taking a bit of a beating last night, definitely Asian currencies are trading on a firmer note this morning, and traders are expecting that this would probably continue at least for the next 24 hours. But as far as the Asian currencies are concerned, as a separate story from the dollar, traders expect that any strength in Asian currencies at the moment could be pretty short-lived. They're expecting consolidation for at least the next couple of weeks or next even couple of months anyway. The fund flows into Asia, especially into the stock market, has shrunk quite a bit in the last, especially the last 1 week. In fact, yesterday we had outflows, and so far in the week to date, and so far this week, we've had net outflows from every single country apart from Japan. So they're expecting that the outflows could continue to pressure Asian currencies, and there's also a lack of fresh factors going forward to propel the risk appetite. But of course, this is all. For the time being, traders expect that this is just a temporary consolidation much needed after the rally we saw, and they're still expecting a stronger end to the year for Asian currencies.
Trish, sit tight. Let's get to our forex guest this morning, a man I've not seen myself for some time, Claudio Piron. He's head of Asia Forex Research at JP Morgan Chase. Good morning, and good to have you with us.
Thank you.
Trish was just talking about dollar weakness. Is that likely to continue? I mean, traders we talked to say maybe that in the next 24 hours. Longer than that, or no?
Well, I think obviously dollar weakness depends upon risk appetite, and there are a couple of things that the market are looking at in the next 24 hours. Needless to say, the Fed FOMC meeting and whether that will continue to advocate this policy of lower rates for longer, and obviously whether it will reaffirm its stance about buying about $1.75 trillion in mortgages and treasuries. So that could help sustain the rally, and though it should be said that that is priced in to some extent, and that may help the dollar. But the other thing as well today is we have the European Central Bank with its inaugural one-year repo. Now, if that sees a large allotment size, meaning that European banks are willing to extend their balance sheets and take fresh liquidity from the European Central Bank, that, in contrast, could actually help the euro as well. So we have a little bit of tug of war, and I would say it's very difficult to see a near-term trend evolving, particularly in the summer months that we have here.
Trish?
Claudio, what about any short-term trades you can recommend for Asian currencies? I mean, yes, you did say that it's a bit cloudy, a bit choppy at the moment, but would you look to, take opportunity of the current dollar weakness to get into Asian currencies? And which ones would you be recommending if that's the case?
Yeah. That's a fair point. I think one has to step back and try and look where the opportunity is amidst this kind of sell-off that we've seen to some extent in the Asian currencies and equity markets. And one of the ways to try and position yourself is trying to look at a thematic macro trade that will evolve over the next couple of months and try to treat this as a short-term opportunity to enter into a position. So the two ones we're focusing on are pro-cyclical currencies, to be long Taiwan dollar, to be long Korean won, to be long the Singapore dollar. We found that these three currencies are the most correlated with the U.S. Purchasing Manager Indices subcomponent for import demand, and our economists are expecting that PMI indices in the U.S., or the ISM survey, I should say, in the U.S. will rise above 50 in the third quarter, and that should lift these high beta export dependent currencies. The other trade that we're looking at is obviously the evolving inflation side of things. If higher commodity prices, if that trend continues, what we'd like to be is actually long Australian dollar, long Malaysian ringgit against being short the Chinese renminbi and being short the Singapore dollar. Here we're looking at a terms of trade impact as higher commodity prices help to lift the Aussie dollar and potentially the Malaysian ringgit to outperform against the renminbi, which we only expect to appreciate at the end of the year.
Can you give some targets of those currencies that you like?
Well, I think, in terms of dollar Sing, purely on the dollar Sing side, when we're looking at that, in terms of the export-dependent trade, what we're thinking about is potentially the low 140 area. When we're looking at, for instance, dollar Korea, we're looking at 1180. So we do think in Korea won and Sing terms, those would be the potential targets. In terms of, let's say, Aussie dollar, I think we can get to the high 80s in the next couple of months, as well as a
Claudio,
commodity.
Piron, we have to leave it there.
Thank you.